phones, but I'm glad you're here. So before we kick off, a little bit of introduction. My name is Bart, and I run Polish Business Link together with Adam Pilanc from Step by Step Financial Solutions. We came up with the idea to give you the updates of markets, properties and general market feel for 2024. This type of webinars we're going to run on a regular basis, and I'm sure March, April is the one that we're going to do another one as new budget will be announced. Now, what we want to achieve today is give you a little bit of update, but also making sure that you're here, you're spending a little bit of time. So this is a fantastic networking opportunity. Please feel free to use chat window to introduce yourself, making sure that you actually pass any information that we can contact you. Also, number two, this show is being recorded, and we're gonna send everything to you after that. So if you find anything useful, you want to actually go back to the presentation that we're gonna have, then definitely that's the one that we will send to you. Now, introduction from me when it comes to properties. I don't own any property beside my house, but I think I changed my property twice, so I fairly understand the process in place, how and what mentally you need to do. Now we are with my family with a bigger house, and we are lucky actually to change that house straight after pandemic. Now it's a little bit of tougher market. But tougher for who, and how is the prospect looking? This is what we're going to discuss today. Before we kick off, I've got a question. Let me just look at a poll and quiz that we have. And maybe do we have this available? Let me just have a look. Yes, it is in there. So on your screen, we just ask the question. Let me launch this poll for you. So the question is for you, what best describes you? Who is in the room? We've got nearly 20 people here. You're a first-time buyer, you're a homeowner, maybe to look for a mortgage, maybe you'd like to have this spare cash to invest somewhere, property investor, or maybe you'd like to just be here because you like us, maybe you like actually idea of networking that we're gonna like. Brilliant. The answer are coming, which is great. Thank you very much for your engagement today. And I'm just ending the poll and share the results. So basically what we have is the first-time buyer as a little one. Most of you are homeowners or property investors, which is fantastic. Thank you very much for that. So without further ado, I would like to introduce our guest and partner of Polish Business League, Adam. Financial advisor, director of Step by Step Financial Solutions, but first and foremost, you're an entrepreneur, you employ people 10 years. Adam, welcome.
Hi, welcome everyone. Pleasure.
So Adam, so perspective of 2024, but what we have learned out of 2023, this is the first subject we're going to discuss. We will try to answer all the questions that we will have from the audience. And also, last part of your business journey, you're an entrepreneur, as I did mention, over 10 years on the market, and you recently graduated out of the Business Mastery by Goldman Sachs. So we're looking forward to have a little bit more questions about your experience of this and how this helped you to grow the business. But let's kick off and just start it off. So what we can expect in 2024 for market conditions? Let us give us a little bit more insight here.
Yes, Bartek. Again, thank you very much for the chance to speak today. I'm pretty sure we're going to have a very resourceful 45 minutes. What I'm going to do today is just briefly give you an overview of what happened in 2023. It was definitely an interesting year. Give you a bit of a prediction for the 2024. Obviously, it's really tough to predict the future, and we're not going to try to give you answers for the 2024. But what we're going to do is we're going to just focus on what could happen. Effectively, we are educating ourselves on an ongoing basis. We've got access to various reports, and people are much smarter than we are. So we're going to just try to give you a bit of a flavor and overview. But most importantly, what I'm the most excited about today is just to give you some tips on what to do in 2024 in relation to your business. Because as Bartek mentioned, I've recently completed a Goldman Sachs business program, very intense, 4 months program at the Oxford University. I've been a long time learner, so I love to learn. I love to dive into those subjects. I'm going to give you some ideas which I think you're going to find useful today. Okay, so let me just quickly share the screen. Right. So, Barty, can you see?
Yeah, everything is nice and clear. Yeah.
Yeah. That's brilliant. That's brilliant. Excellent. Fine. So what we're going to do, we're going to, like I said, kick out with some market updates today. Right. Okay, so just brief overview about myself. So as Bart mentioned, I've been the business owner for the last 10 years. I've been involved in property transactions for over 15 years in UK. So I've initially started as an estate agent and then continue my career as a mortgage broker. I've been investing in with kind of property market over the last 12 years. So we've built a nice property portfolio, which gives me and my family and my wife a lifestyle, sustainable lifestyle moving forward. The business journey I'm on at the moment, building step-by-step financial solutions, is a great bonus and mission of mine. We're going to talk about mission and vision and values later on in this presentation. But the properties was the way for me to get a financial independence. As Barton mentioned, recently graduated from Goldman Sachs program. I've completed Tony Robbins Business Mastery program again. So I'm going to give you a few information which I've learned, which I hope you're going to find useful. So first of all, let's look at 2023 and let's look at what actually happened in the market. So one of the most important thing was 14 consecutive hikes of a Bank of England base rate. So whoever is on the property ladder, and some of you are, and property investors, you own the property, you know how stressful it can be when the interest rates are going up. Some people who are within their fixed rate period, they wouldn't be concerned about this as much as others. But anyone who experienced a remortgage journey last year, I don't envy you that, because it was really, really stressful. Again, the 15-year high Bank of England base rate, 5.25. We haven't seen that for over a decade in UK. And one of the maybe a positive sign last year was that the government have actually managed to put the inflation down to about 4% towards the end of the year. Their target was about 5% towards the December. They've achieved and overachieved in that target. And that's the direct correlation of the pedal of the brake, which is actually the Bank of England base rate. Money are more expensive to lend at the moment. They are effectively more expensive. That's why there is less money pumping into the industry, to the general community. So effectively, that's slowing down the inflation. So what about the housing market? The house prices fell by about 1.8% over the last year, which may be a bit surprising, because in the media there was all doom and gloom, and we have heard about the property market crashing and not moving at all. But as you see from this data provided by not only Halifax and Nationwide Building Society, but as well Office of National Statistics, we've actually experienced a fall in property prices by 1.8%. So we are currently 4.5% below the all-time high, the record high, which had actually happened last summer in 2022. So that correction after COVID was not as significant as some people expected. Some areas performed better than others. So we can actually see that Northern Ireland and Scotland have actually experienced growth over the last year, which is amazing for that community. The England in general, 2.9% down, 5.2%. That's East Anglia. That's the region that actually performed the worst out of all the regions. But that region as well experienced a significant growth after the COVID, which we're going to talk about in a minute. Wales was down 1.9%. We can actually see that London was down about 2.5%. last year. So again, we did expect a slowdown in the property market due to the high interest rates, but the property prices actually hold quite well despite the market conditions. So what's going to be fairly interesting is to look at the house pricing transaction and a bit of a trend of where we were pre-pandemic and where we are now, because we can actually clearly see that transactions were quite high back in October 2019. That's before the pandemic. And then we can see the big dip, the big drop, regardless of whether you've bought with a cash or whether you've bought it with a mortgage. April 2022 was the lowest months on the transactions in probably a decade. And straight after implementation of stamp duty holiday, that boosted the transactions tremendously. That created a growth in property prices, which again was not sustainable. And we see that the market have actually cooled down towards the end of October 2021. And that was a direct correlation with a rising interest rate. So that's when the interest rate started to rise and we actually could see the slowdown in the market. One of the lowest point of the property was back in 2023 July. That's where the mortgage approval and that's where the cash transactions were actually the lowest from the pre-pandemic levels. So what was the biggest challenge in 2023? If you are a property investor, you are probably fully aware of the difficulties in placing any business through the buy-to-let lenders. The affordability was a major issue. The lenders on the buy-to-let market, they normally work out not of your affordability, but they work out of the rent. So is this investment sustainable? Can this investment be kept outside of your personal income and still make you money? That's why this is a non-regulated business, and that's why this is more a risky business. However, due to this high interest rates, a lot of affordability criteria were not by the landlords. So previously 25% was more than enough to buy an investment property and have enough lending to be supported. Last year, we've seen a bit of a shift. So we've seen a lot of clients needed to put more deposit down to achieve those minimum rental requirements, anywhere between 30 and 35%. But up north, the properties where the property prices are much lower, the cases were much easier to place and the rents went up accordingly. So affordability for a first-time buyer, again, was a major issue last year. So we've seen the cost of living crisis. We've seen the energy prices and food prices going up with the inflation, plus the hikes in interest rates. And on top of that, the very high prices, which have actually risen post-pandemic, all of that created a gap so that the first-time buyers really struggled to get on the property ladder last year. There was as well a less property transaction. And this is not only due to the cost of living crisis, but there is a strong distinction between you must move customer and you want to move customer. So you always, in the economy, you're always going to have people who have to move. So that are the probate clients, so where you've inherited the property and you want to sell it, divorce cases, job relocations, and so on and so forth. Those are the clients who have to move, and you're always going to see the properties on the market in UK. But the big part of the market is the people who really want to move, right? You want to move to the bigger house, you want to move to the smaller house, you want to upgrade your property, you want to move to different locations. And those people last year, they really hold on to their property because they didn't know in which direction the interest is going to go, the cost of living risen, the interest rates went up, and that created again a stress on the family budget. And a lot of people actually thought, we got to stay put for a foreseeable future. So this is actually a direct correlation with a pricing, because when the stock is low on the market, but demand is still relatively high, the properties will not fall. So although we've seen a lower number of transactions, we actually observed a lower stock on the market. So that's why the property price have actually held quite well through this market conditions. Right, so what's the predictions for 2024? Let's start with inflation, because this is always the big one. Inflation will have a massive impact on interest rates and on the monetary policy within UK, like in every single country. And we are actually looking at some great names here, like Oxford Economics, Deutsche Bank, Capital Economics, the Bank of England predictions, the Citibank. Those people seems to think that inflation will go down to about 2% by the end of Q2. And a lot of those people are very consistent with their message. And why do they think that? Why do they seem to think that we will manage this inflation so quickly and so well? Why are they so optimistic? There is a huge likelihood of 15% reduction in energy tariffs in April 2024. That alone could have a 1.5% impact on the decrease side on the inflation. On top of that, the food inflation is on track to slow down towards 2%. And that was actually the biggest thing last year. The food inflation was tremendous. So a lot of analytics seems to think that we will achieve this goal. However, on this graph, you can see this red line above all the other prediction. And this is a prediction from Bank of England itself. So they seem to think that we are not as optimistic about the inflation. The energy prices had a tremendous impact on the inflation last year, towards the end of the last year. And the Bank of England is not so certain that we are out of this race with the inflation yet. So they're predicting a higher interest rate for longer. They're not predicting any spikes in interest rates, but they're not as optimistic as others about reaching the inflation target. So they seem to think that over the 2024, the 3% mark will be more realistic. So let's talk about the Bank of England base rates, because that's again, that will have a massive impact on people who are borrowing the money. A financial market seems to think that the Bank of England base rate in UK may actually start going down around May and June 2024. The expectations from the Bank of England are again more cautious. They want to keep this interest rate higher. Again, lowering down the interest rate would have direct impact on the inflation and can spike the inflation very quickly. So the chief economist of Bank of England seems to think that they're going to pump the brakes and hold the fire for now, and they're going to try to see slightly bigger picture in 2024. So the financial markets predicts 4.25 towards the end of the year, which would be an amazing news. But let's see how the economy is going to keep up with the current changes. So what are the conclusions? The mortgage rates are coming down. And despite the fact that the Bank of England base rate is still holding at 5.25, the lenders are borrowing the money based on the swap rates. The lenders will borrow the money, they exchange the money on the international market, and the confidence in the market is quite high at the moment. So the swap rates are actually coming down. This means that the lender can kind of be more aggressive with their approach, and they are started competing, and we already see a race with a free at the front, which, looking back at 2023, where we've actually seen a 6%, 5.99, 5.89, or even above 6, close to 7%, going back to anywhere around 4% is a tremendous upgrade to what we've seen last year. Unfortunately, we are not coming back to 2%, 1.5% anytime soon. But again, having the mortgage interest rates around 3.9, 4.1, 4.5%, I think it's still pretty good moving forward. So the buy-to-let market is expected to recover this year. This is mainly due to the growth of the rentals, rental payments. So the rental market have actually catched up with the increase in interest rates. Again, that's going to create better affordability for landlords and more opportunities. Some landlords is going to have to offload their portfolio due to the new tax implications. So the landlords with bigger portfolios or the landlords who's already incorporated the limited company structure may look at this as an opportunity for them to actually expand their portfolio and snap those properties at a great price from the landlords who are not willing to keep those investments any longer. The house prices, the prediction is that the house prices will remain relatively steady or on a slight increase this year. Again, low supply. It's going to be an issue this year again. I don't think that the people is going to gain confidence very quickly. I think everyone needs to adjust to the new reality. And again, the people who needs to move, they're going to move, but the people who wants to move is going to think twice about it this year again. So affordability seems to be an issue for a lot of clients, and we are dealing predominantly with self-employed and limited company directors. That forms a huge part of our clients. And I can give you a quick tip at the moment about the affordability criteria for limited company directors. Majority of people who have joined us today are either the property owners or investors in the property markets. But those people will face a remortgage challenge anytime soon as well. And to boost your affordability, some lenders will actually use your retained profits, so operating profits after or even before tax. So the default way for any lender is to look at your salary and your dividends as a company director. But some lenders would be actually looking deeply into your company's accounts, and they're going to see, okay, so if this company had a profit of, let's say, 100,000, and this director doesn't want to put this money out of the business to pay a huge tax on the dividends and would like to keep the money, to keep investing within the business. So there are lenders who are fully aware that these funds as a retained profit are available for a director anytime to withdraw, and they will use that amount to actually work out the affordability. With this little trick, with operating profit before tax or even operating profits after tax, we were able to achieve better affordabilities for our limited company directors when they needed it the most. So if you are in a position to buy a new place, you want to move up or you want to remortgage, have a chat about this with your broker or come to us. We're more than happy to make some calculations based on your not only SA302s, but as well on your company accounts. So one of the things which is very transparent currently is that the green agenda is here to stay. We need to follow the money and look where it's are going. So the green agenda, it's transparent and it's again here to stay. There are going to be a lot of new grants associated with the new energy, clean energy. And one of the aspects and the sector of the market which we are closely monitoring is the property market. So the EPC, the energy performance certificate changes were delayed. So we were very close to reaching a status at least C or D for a rental property. So C was the target, but that's been actually delayed. So any landlord who owns the property with a D, E or F, it's likely to look at the upgrade of this property, but they're not going to be forced doing it anytime soon. But what it means is that the properties who are non-energy efficient and could be obtained at a great price currently may be likely to attract a grants and benefits who's going to be coming your way. So that's something, again, if you are property investors, something which you can consider moving forward, because you will be able to add tremendous value to the property with any grants. Again, that's going to follow the green agenda. So what are other opportunities around this green agenda? Again, being a participant of this Oxford program, learning from those professors, they know that this is something which the future is going to hold for long term. So again, if you are a business owner, think about how you can incorporate a green agenda within your offering and be ahead of the curve. So any energy efficient construction company would be obviously much needed. Installation of solar panels, advanced home installations, energy efficient windows, doors, charging station, car charging stations. That's again something, if you're in the trade, something look out for. you may be looking at renewable energy solution providers. Those companies will be actually likely to attract any grants. So if you're going to be installing any of the geothermal heating systems, that's something which again government will be very favorable to. The smart home technology, that's a big one at the moment. A lot of people are moving into the energy efficient lighting, energy efficient system, home energy maintenance systems, smart thermostats. So any company which is providing already services in building construction sector, it's probably very smart to get into this smart home technology space right now and be at the front of this curve. There are various others which you can look at, but just bear in mind that this is something which is not going away. So we still got a few minutes, and this is probably the most exciting part for me, is what you can do as a business owner to elevate your business in 2024. So one of the things which I think everyone has to pay attention to is the AI revolution. I think everyone has to look at these AI tools and embrace the artificial intelligence. Some of the business owners are very worried that AI will take their business away and they're going to be replaced by AI. But the truth is that the people who are using AI are likely to take your job and your job opportunities. So if you are again implementing those tools, if you are using it or using companies who are using AI, like for instance Bart with his HubSpot technology, you're going to be again in the front of this revolution. Recently I've attended a great seminar on AI, and these are some of the applications which you can implement in your business, which may help you with either your content marketing or with integration of different systems like a Zapier app, and so on and so forth. Explore those apps, work with the ChatGPT on a daily basis. Is a really great tool to actually help you out with your business. What we've got here is we've got some useful prompts for the business owners. I'm more than happy to share them with Bart, and Bart can email everything to you. But think about the way you can actually use the ChatGPT in your day-to-day running operation of the business. What you can do is you can either use those prompts for business owners, like give me a list of inexpensive idea on how to promote my business. The ChatGPT is getting very, very creative with those things. Dive into this, ask those questions, and you're going to get some really creative solutions. You can even ask to create a 30-day social media campaign and strategy, which you can then talk to your business development manager at your company, and you can start implementing those things if you are not using other services. Prompt priming. Write me 5 headlines. Write me 5 headlines about. Write me a headlines and topic about this, and give the examples. Again, be creative with the way you're asking questions to the ChatGPT, because then you're going to get those unique answers. And the easy prompts, like write me an engagement headlines for my blog, or keywords, give me some AdWords examples, the call to actions, and so on and so forth. There are great tools at the moment which you can use and utilize in your business. One of the very important things which we've learned at the Goldman Sachs program, which is one of the best programs I've been to, that's the best I've been to, but this is one of the best in the country, because it is actually sponsored by the Goldman Sachs Foundation, and they put in tremendous amount of work into this, and they are actually very helpful with identifying your customer proposition. So we are all business owners, and we need to think about how we are going to deliver this value proposition to our clients. So effectively, what sort of problems are we solving for our clients, and are we doing this better than anyone else on the market? Because let's be honest, if our clients are able to solve their own problems, they will not need us. They need us because there are problems which they are struggling with. So a great tool to actually think about your value proposition is the value proposition canvas. You can actually find this on a strategizer.com website, and this will actually help you tie in your customer profile with your value map, and that will create your unique selling point. You need value proposition. This tool is a very easy to use tool, but it will give you some understanding, and you can focus on what are the wants of your customers. What are the pains? So what really problems are you solving for our customers, and what are their needs? What do they really need from you? And on the other side of this canvas, you've got your value map and you've got your pain reliefs. So how you can actually address those pains. What are the pains? And are you really addressing all of them at the moment? Are there any gaps within your value propositions? What is the experience? So how are you actually going to address those needs? So what's your products, services, and how you deliver those services? What are the solutions for your customers? Looking at this value proposition canvas can give you a great understanding of where are your gaps and how you can improve on your USP. One of the best tools which I've actually used within the program was a pyramid of resources. Again, we need to find a way of delivering our USPs, and we're going to do it through resources. We're going to have things which we are working with. So what I'm going to share with you very quickly is our step-by-step financial solution pyramid of resources. So what you can see, the resources are divided into 4 different parts. There are basic resources which helps you run the business. They don't give you any competitive advantage. This for us is going to be things like an office space, meeting rooms, phone services, websites, and so on. We have to have those things to actually perform our duties. There are base resources. Those are the resources who will give you very low competitive advantage. Those things are utilized by every single competitor. So the things like, for instance, for us, appointments outside of working hours, helping clients every stage of the way, no upfront fees for clients. We think that those are really base resources for our company. But where the things are getting interesting is, what are your core resources? Your core resources and your breakthrough resources are the resources within your business which are going to help you stand out from your competitors. So the core resources for us, they are Polish speaking. So we actually offer a mortgage and protection advice in both Polish and English. And what's very interesting is that back in the days, 10, maybe 8 years ago, this used to be our breakthrough resource. This was a resource which was giving us a tremendous advantage over the competition. However, when the competition have grew, this is actually a core resource for us. So we need to look at this. We've got a fantastic admin team. The ladies are just second to none. I'll tell you, if you ever have a chance to talk to them, they are absolutely gold for our company. So I was very keen of putting them as our breakthrough resource, but I understand that we really need admin team as a core resource, because the breakthrough resource are the things which are distinguishing you from anyone else. So for us, for instance, is a influencer marketing, which we implemented, and we're working with Alexander Fiedler. You may heard of her. An amazing tool for us, because we are able to provide and add value to the community, which is again our core resource, to support our community through those market updates, through the charity events you do, and our YouTube channel. This is again something which we feel is our breakthrough resource. So think about your breakthrough resource within your business, but look at it very closely. And do not mistake your core resource with your breakthrough resource, because those can actually change very quickly depending on your competition. So what are the ways in which you can grow your business in 2024? There are a lot of ways you can actually grow your business. You sell more, you sell more frequently to your clients, you increase the value of your transaction. Those are the easy ways to grow your business. But you have to identify, where are you looking to attack the market, because you are not able to grow in all the areas. And the Ainsworth matrix, again, is a tremendous way of looking at your market segments and the way in which you can explore the growth opportunities. So you're either going to sell more to your existing clients through the market penetration, or you're going to sell new products to existing clients, or you're going to work through the new markets with an existing product, or you're just going full-on expansion, diversification, and you're going with a new product to a new client. This is the most expensive, this is the most risky way of growing the business, but as well, the reward can be tremendous in this quadrant. We've identified a lot of shiny objects within the growth of the step-by-step financial solutions, but we've realized that through the market penetrations, through offering more to your existing clients, this is just the cheapest and the best way of elevating your business in 2024. So if you're thinking about selling more to your existing clients, are you really utilizing your database? Are you really taking advantage of all the contacts you've got within your database? Are you actually reviewing regularly your clients' needs to offer them the services you've got to offer? This strategy does not cost a lot of money. The risk is very low, but there are the golden nuggets within it. There is definitely potential for growth for any business. Just revisiting your customers, asking for referrals, reviewing your services is going to be very, very important if you want to minimize the expense to the growth ratio. And pick one or maximum two growth opportunities. That was always an advice, because if you focus on too many things, you may end up not focusing on anything predominantly, and you're going to spread out yourself too thinly. What was the biggest difference maker, according to the Harvard and Oxford professors, in growing your business and establishing your business? The purpose, the vision, and mission seems to be on the top of everyone's mouth when we're talking to people who have grown successful businesses. This is actually the biggest difference maker. It sounds a bit of a cliche, I know, but if you sit down within your company and you're going to find time to actually work for your vision, your purpose, your mission, and establishing your value, you're going to see tremendous growth, not only with yourself, but as well with your team. And make sure you involve your team in working through those things, because they're gonna have a different opinion about what they seem to think your unique value proposition is and what are the core values. We don't have a lot of time today to focus on why, how, and what diagram, but this can actually show you that why is the most important thing in your business. How you're delivering, we all know how we're going to do it, and exactly we know what we're selling. Everyone knows what you're selling and how you're selling it. But if you ask business owners why they're really doing it, what's the purpose, what's the deep needs they're trying to address, that's where the knowledge lays. And we don't have a lot of time today, but I would like to refer you to an amazing TED Talk by Simon Sinek. I think it's about 10 years old. So it's not going to be your high quality TED Talk recording on YouTube. But this is a 15-minute talk about how the ideas of going from what we are looking to do to how we are looking to do it to what we are delivering from inside out is revolutionizing companies like Apple, Amazon, and so on and so forth. So definitely, if you've got a time, spare 5-10 minutes on your lunch break, I would strongly recommend to listen to this. So our purpose, mission, and value within Step-by-Step Financial Solutions, the biggest things for us is to empower the Polish community in the UK with comprehensive financial education and enabling them to make an informed decision about their financial future. And we've got a strong emphasis on linguistic and cultural empathy. We're going to serve the British community. We're going to serve any other community with utmost respect, the way we want to be treated. And we've actually experienced living abroad, so we can actually very well emphasize with any other community in the UK. The last thing, because we're running out of time, I'm just looking at Bart sitting there anxiously, but one of the last thing I want to emphasize is asking about the Google reviews and elevating your business through the customer reviews. It is a tremendous tool to grow your business in 2024. I'm just going to give you a quick example of Step-by-Step Financial Solutions. And by all means, we are not the golden standard, but we are very focused on the client care, on the client experience, and asking for the referrals. So as you can see, we are approaching 300 5-star Google reviews and another 125 on Facebook. We've actually stopped collecting the Facebook reviews because we see a better result from the Google reviews. Imagine when you are going to a YouTube or when you are going to Google page and you're searching for a business, those reviews are one of the top things which are going to show up on the Google search. And what's quite important as well is there's the Google Map search, so the advisor or the firm nearby searches are skyrocketing at the moment. So people want to see which businesses are nearby them. And the higher your rating on a Google star review, the better positioning you can obtain on this Google Maps. So this is a free tool which any business owner can use. Be transparent with your services, ask for those reviews, and grow your business organically through those kind of reviews. And one of the tips I can give you, because we went through this journey, is you need the process. Anyone within your company needs to know what is the process of obtaining these Google reviews. You need to think about the tools which you're going to use to actually collect those Google reviews. So are you going to be sending an email? Would it be a text message? Are you gonna, maybe you're going to use a platform such as HubSpot or any other platform to actually ask for those reviews for your email marketing campaign. And you need to deliver outstanding service. To actually sit in front of the client and ask the client for a 5-star Google review, you have to be confident within your service, within your salespeople, within your service accommodation people, within your product, and set the expectations within your team that your main goal is to satisfy the customers and gain this 5-star Google review. If this is an expectation in your firm, you're gonna exceed the client's expectation because everyone will be at the same board. And even sometimes by sacrificing your profit, you're gonna try to over deliver on the services, and that's always going to be great for your business. And remember, you have to reply to those reviews. The Google loves active businesses. They promote active businesses, and by responding to those reviews and getting those regular reviews, you're positioning yourself for success. So where you can find us, we've got offices in London, Bournemouth, Edinburgh, and our head offices in Southampton. So you can find us in those different locations. This is our team of financial advisors and admin people. We are here to aspire the business owners. We really want to make sure to support the community and the growth of our community. And we really want to add the value to anything we do. So I just would like to say thank you very much for a chance to talk today. If you've got any questions, I'm more than happy to answer those questions. Bart, thank you very much again for the opportunity, and the stage is yours.
Thank you very much, Adam, for comprehensive update, and I think loads of to take off. I'll do a couple of summaries that you actually mentioned, but what I want to say is that the last thing that you said, actually replying on comments on reviews is not only the great idea for Google reviews, but for any other tools in LinkedIn or whatever. If we are not engaging, the algorithm probably won't boost us. So that's my take on this. But what I want to say, what an amazing story you made, and thanks very much for sharing, extensive experience within the market. Questions. We've got live audience here. Chat is there. Please put your questions up, your comments maybe. If you'd like to unmute, just wave your hand. Whatever, we are here. We're not biting. Maybe you can give your perspective of 2024 markets and what you're gonna do, whether from the perspective of construction business or maybe investor of the properties, doesn't matter really. What I want to before we start with the questions, and honestly, feel free to put in there on the comments on the chat, the green agenda. I think this is something that on your I think this screen that you shared about the competencies, more and more businesses need to distinguish themselves from others, and obviously this sounds kind of as you said, cliche, like how to be more green. What should I do in terms of business? But then when you actually think it deeply, if the way that you communicate what you have done within yourself, within your team, even from the property perspective, how you, I don't know, if you own a Airbnb and you're cleaning with something that is more better for the environment, and you had just a tiny step that will help you to get more attention for the people. Maybe not yet, maybe some of the people will ignore this message, but believe me, we've been talking with the massive organization. At some point, some of this will be required things to do. So green, as I think, is a great way to do within the properties. What's your take on it?
And not only, Bart, and not only looking at other businesses and spending time with 70 one of the most successful business owners in UK over the last 6 months, I've realized how many firms are actually capitalizing on this green agenda with a bamboo cup products or with a sustainable packaging or sustainable beauty products and so on and so forth. There's so many things, there's so many ideas which people are actually capitalizing on. And this is actually the industry which is going to only grow. It's going to only grow because that's the way the world is going, whether we like it or not.
Adam, we had a question from Tomasz. What do you think about the tracker mortgage at this moment and at time? Do you think that it is worth it?
Yes, this is a very interesting one. So thank you very much for that question. It's very hard to answer it in very black or white way. So I think we have to think about what our needs are. So if we think about the tracker mortgage, what is the tracker mortgage giving us? It's giving us more flexibility. That sort of mortgage is going to be likely to have a lower exit fees. So if someone needs that flexibility, thinking about moving, some tracker products do not have any early repayment charges. So you can actually switch to fix at any point. So you are not taking such massive risks. But at the same time, there is a risk if you're tying yourself into a tracker product with an early repayment charges, that if anything changes within with the inflation or with the global politics and something which we don't expect, you're gonna have to bite the bullet and gonna have to pay the higher interest rates. What I would say is that currently a lot of clients are taking those tracker products. So if you have a low attitude to risk, the fixed rate product I think may be useful for that type of clients. But if you are looking to risk, if you are thinking of maybe gaining a few pounds every month and looking at the decrease in the base rate in Q2 or Q3 next year, you may be actually getting yourself a really good deal. So what I would suggest so much, look at the difference in pricing of the fixed rate product and the tracker product. Try to apply maybe 0.25% or 0.5% either way and see, okay, am I really stressing my budget if the interest rate is going to actually go up by 0.5%, what it means to me on a monthly basis, and what I can gain by maybe reducing that interest rate by 0.5%. Because we cannot expect a rate to go down tremendously this year, because again, that's going to trigger the inflation going up, and that's not the government wants to do. So those gains can be there, but we need to think about those gains as probably anywhere in the region of 0.25, maybe 0.5%, maybe 0.75% next year. So just think about those two things before committing.
Adam, thank you for a comprehensive answer. Anna.
Hello. Thank you, Adam, for your very interesting presentation. And I would like to tell you that I'm also at the same business as you. And my question is, what is your strategy? Because, and thank you for this, for sharing some tips, advice, how you develop your company. But my question is, how do you develop your strategy towards to have diverse clients? So not only Polish clients, which I believe for you also is very rewarding to help our compatriots to get on property ladder, and I love it. However, you know, it's nice to have, you know, diverse clients from different communities. And how do you do this?
Yes, this is an interesting one, Anna. Yeah, this is interesting one. And I think if you are in this space, if you are in financial mortgage advising space, we've been quite spoiled by the Polish community in terms of them being attracted by us. So at our company, for a very long time, we were predominantly dealing with the Polish customers. We did have some relationships with an estate agents and other professionals like an accountants were referring us any other nationality. And effectively, the way we've actually grown the other communities is by providing amazing service to the clients we've had. So any client who came to us and was a non-Polish client, we try to deliver tremendous service because we know that this happy client is able to refer us their friends and their family. And we've actually got a good name around, and people are calling us now from Google. So Anna, the great way would be to get yourself exposed on this Google review website, because clients will look at the mortgage services within your area, and the SEO's engines work magic when you've got this 5-star Google reviews, you're not paying for AdWords, you're not a sponsored post, or you're not perceived as someone who's trying to get a client through paying the way into this via the AdWords, you are actually growing organically. And if you're going to have this high quality 5-star or 4.9-star rating on Google, you're going to attract any type of customer. Obviously, having the website in various languages may help. The AI tools these days are absolutely amazing. We are looking into providing services in other languages at the moment through utilizing the AI. So think about how AI can help you attracting the clients from other communities, maybe Romanian, Bulgarian, maybe Italian community, or maybe Ukrainian community, which is going to grow in this country in the next couple of years. This is a guaranteed after what happened in their country. So think about utilizing AI. The most important, get those Google reviews. And if you've got any non-Polish speaking customer, just provide tremendous value. Ask for the referrals, ask for Google reviews, and hopefully they're going to refer you their friends and their family. They're the best clients.
Thank you very much, Adam. Yes, it is what they call the working hard work really over the time, and I wouldn't say it will take like this overnight job, but yeah, if you hard the most and deliver the value outside of mortgage, let's be honest, like when we are as clients and we speak to either our members, they have their own problems, massive problems. If you speak to business owners, speaking about retaining staff, recruiting staff, that kind of questions we need to answer not only when selling, when talking to the humans, and that's always our take, is to take into consideration in what context people are buying, because it's very much important for that. Any more questions? Let us know. I can see Maciej. There you go, Maciej.
Hi guys, thanks Adam for sharing some really good insights. I'm still a beginner investor, so it's nice to find out about those few interesting things. One thing that kind of you mentioned about low supply of stock in terms of the properties market, which was quite interesting, because I wouldn't be obviously challenging you on that. It's just the way I've seen the impact of growing interest rates and affordability from people's perspective. What I notice on the market is there's an increase in auctioned houses from repossessions and things like that. So when you said low supply stock, I was quite surprised, because my observations are a little bit different, and as people are coming out from fixed rates, and remortgaging, I guess this could have some kind of an impact on the amount of stock available, isn't it?
That's right. So this is actually, Maciej, this is great question, and I like the fact that you are actually willing to challenge, because that's always create a good discussion. So thank you very much for that. And I think the way we look at it from the standpoint of serving the clients across the country, some areas may be more active than other areas. But if you think about the market in general as a whole, there's just less new instructions coming to the market. And so there are data which we are using, for instance, from Zoopla or Rightmove, to see how many new instructions are coming to the market. And what we're seeing, and what we've seen last year, is we've seen a decrease, and that's a substantial decrease. But what we see as well is that the properties are sticking on for slightly longer on the market. And what you can actually see, that some of those properties are going to convert into those modern auction sales or the auction sales, because that's going to be people who are tremendously motivated. So when I used to be an estate agent back in the days, back in 2008, that was the time of the biggest crisis in the UK as a property market. So it was really tough to sell any property, it was tough to buy a property. And it was always a one thing on our minds, that the first-time buyer are people who's going to be putting up the market, so they're going to be triggering the market. However, the home movers, if they are not willing to move, there's going to be limited stock availability. So we think about how many people today have actually invested in their own properties extension over the COVID, and they are actually happy to stay where they are. How many people are remortgaging currently and looking at their mortgage payment going up 200-300% and questioning, are we willing to upsize at the moment, or are we willing now to move to the slightly better area? And those people having those conversations with us, and a lot of times they are staying put. And normally those would be the properties who would kind of came to the market, people who were moving up the ladder, down the ladder, and so on and so forth. And that creates this chain of the reaction where first-time buyers can actually look at it and buy it. I would agree with you, Maciej, one thing, there may be more opportunity for investors. That's for sure. Because if you are a savvy investor, if you know what you're doing, and if you know the direction the market is going, you can actually snap yourself a really good deal at the moment. More people are negotiating, that's for sure. We have not seen that a couple of years ago. You were just putting up the offers over the asking price, right? There was a huge interest, but today you are able to negotiate the price. The majority of transactions are actually accepted today below the asking price, which is an amazing news, especially for any investors.
Yeah, that makes sense. Thanks, Adam.
Thank you. Thank you for the question.
Thank you, Adam. Fantastic. And I think just wrapping this up, I picked this very interesting part that you shared with us is people who need to move, people who have to move. I would just give a little bit more business perspective. People who need to buy your product, people who have to buy your product. Very interesting part when it comes to actually buying decision cycles. I took this as a very good idea to actually thinking how people actually buying either mortgage product or your properties in this case. But 11 a.m. I'm cautious of time. Thank you very much, everyone. And Adam, thank you very much for all your time, for your comments. We will definitely work with next event update probably around March time when just before new financial year will start off to keep going with that discussion. What I would share just quickly about the next coming up events. As a Pilanc organization, we organize different events across UK and obviously online. So let me just quickly share my screen just to show you the amount of the next what is actually next there. So the next events is WBL, Women's Business Links Vision Board, 25th. We also run this event in conjunction with other networking. London Connector event is business networking actually in private members club in London. This one is very interesting. One of our members has launched a Boost a BPA leads generator AI, and this is coming to your Adam questions. Many tools are coming, and we're gonna test this tool live with Tomasz, and we have already 50 people registered to this one. This is interesting one. New Able events. New Able is a massive organization supporting business down in London, and it's gonna be an event, networking event in February. We've been partnering with them for some number of time. I will run the event about HubSpot as Adam mentioned, and also we're gonna run construction networking event on the 22nd of February with Inga, our partner down in London in her office, N1 postcode based in London. So all of events are there, events.pblink.co.uk, more to come. Let me just stop my share screen. And once again, thank you very much. We will distribute all the recordings, everything that we can do. Please get in touch. And Adam, thank you very much for your time.
Thank you very much, everyone. Have a great 2024.